Let's talk about money. We use it every single day. It kind of dictates everything we do, right? But have you ever really stopped and asked yourself where it actually comes from? The answer is, well, it's way more surprising than you'd think. And it's a secret that's been hiding in plain sight this whole time.
I'm not kidding. That's a real quote. Almost all the money we use isn't printed by the government in some giant mint. Nope, it's created digitally, basically from nothing. And once that idea really clicks, it completely changes how you look at the entire economy. So that's the big question, isn't it? How is this stuff actually made? Well, over the next few minutes, we're going to pull back that curtain and show you the hidden mechanics that are secretly powering our world. Okay, so to get started, you have to get your head around one core idea. The cash you have in your wallet is not the same thing as the money in your bank account. The real story, the big story, starts with the money you can't even see. Just look at this statistic from the Bank of England. It's pretty wild. A massive 97% of all money, it only exists as digital numbers on bank computers. So what about the coins and bills we actually think of as money? That's just 3% of the whole pie. Just 3%. And that really is the perfect way to think about it. We only ever see that tiny little tip of the iceberg, the physical cash. But underneath the surface, there's this enormous, invisible financial system that's doing all the heavy lifting. So if 97% of money is digital, and the government only prints the physical stuff, who's creating all the rest of it? The answer, and this might surprise you, is commercial banks. Yeah, the very same ones you might have your own checking account with. The whole process is called fractional reserve banking. Now, it sounds super technical, I know, but the basic idea is pretty simple. See, banks aren't just big piggy banks storing your money, they're actively creating it. The whole point is to get money moving through the economy, right? To fund businesses and home loans, which is supposed to help everything grow. So here's how it works in real life. Let's say you go to a bank for a loan. They don't just go to a vault, take out someone else's savings, and hand it to you. No, they just type the numbers into your account. That digital $10,000 deposit, that's brand new money. It was created by the bank the second they approved the loan. It literally did not exist a moment before you signed the paperwork. All right, so if regular commercial banks are out there creating all this new money, who's in charge? I mean, who makes sure the whole system doesn't just spiral completely out of control? Well, that's where the central banks step in. And you've really got to understand the difference here. Commercial banks, think of your local bank. They work with you and me, the public. And they're the ones creating that 97% of digital money through loans. Central banks, like the Federal Reserve here in the US, they're like the bank for the banks. They're the overseers. They set the rules of the game. And they are the only ones with the authority to actually print physical money. Central banks really have two major tools in their toolbox. First, yeah, they print the physical cash we use. But their most powerful tool by far is digital. It's called quantitative easing, or QE. You can think of it as the central bank creating its own new digital money to buy things like government bonds. It's a way to pump money directly into the financial system, especially when the economy needs a boost. Okay, so banks can basically create money out of thin air. We've got that part down. But what actually happens when you build an entire global economy on top of that one idea? What are the real-world consequences? Well, it boils down to a really simple reality. Creating more money doesn't magically create more stuff, more cars, more food, more houses. So if the amount of money in the economy grows way faster than the amount of actual goods and services available, then the value of every single dollar goes down. Your money just buys less than it used to. And that right there is inflation. And you know what? We just saw a perfect example of this. During the pandemic back in 2020 and 2021, central banks used massive amounts of QE to keep the economy from collapsing. The money supply shot through the roof. And what happened next? Well, pretty predictably, the prices for everything from groceries to cars started to climb fast. This brings us to a super important concept, purchasing power. Think of inflation as a silent thief. It quietly steals the value of your savings. The number in your bank account might stay the same, but what it can actually buy you in the real world has shrunk. And here's the other huge consequence we have to talk about. If almost all new money is created when someone takes out a loan, what does that really mean? It means our entire money supply, our whole economy, is fundamentally built on debt. For our economy to grow, someone, somewhere, has to be willing to go deeper into debt. This kind of debt-based system is, well, it's inherently a bit shaky, and history proves it over and over again. You look at the Great Depression in 1929, the 2008 financial crisis, Both of them were kicked off by a massive, out-of-control expansion of credit, of new money being created, that eventually led to a catastrophic collapse. So, after all that, you might be thinking, okay, that's interesting, but why does any of this actually matter to me? Well, it matters, because understanding these hidden rules isn't just some academic thought experiment. This knowledge is actual power. See, the way money gets created isn't a neutral process. When all this new money floods into the system, it tends to benefit those who are closest to the financial system first. It drives up the prices of assets like stocks and real estate. And as research from the IMF has shown, this process often makes the gap between the wealthy and everyone else even wider. And this is exactly why this knowledge is so important. When you understand how it works, you can make smarter decisions to protect your own savings from inflation. You can spot the big systemic risks before they turn into full-blown crises. And it gives you the power to ask for a system that's maybe a little more transparent and a little more fair for everybody. At the end of the day, money is just an invention. It's a system of rules that we all agree to follow. It doesn't have to control us. We can actually control it, but only if we understand how it works. And just by getting to the end of this, you've taken the first and most important step.